event today. So we have been operating as a local credit agency for Vietnam for the past few years, and we have been rating a number of sectors, around 10 issuers in real estate, renewable energy, financial institution, and recently is a securities service company. So today's event, we will spend about 2 hours with you to discuss about the sector, and we would like to share our view from a CIA view on the sector and the key risks that the sector is experiencing on. And for security service, Vietnamese company and the foreign companies operating in this market, they have a very very high growing over the past 3 or 5 years. Thanks for the retail investor participation and thanks for the market performance. And they have been issuing the bond as well and borrowing from the banks, local banks and foreign banks and creditors to finance their growth. The long-term outlook for Vietnamese security sector and for this business is very high still, given the low penetration of the investor in participating in this market and the potential of corporate fundamental, new IPO, and the growing the market cap over the next few years. In the meantime, we observe the sector are now facing some headwinds about low liquidity and credit tightening for the financial asset and a number of other factors. So as a local CA, and we have been rating military bank securities, and recently it's a Viet Capital Securities. And on top of that, we have been reviewing the sector and watching very carefully about the sector performance as well. So at the request of some of the investor, especially the foreign investor, offshore and onshore, we would like to make this event to have a chance to discuss with you, to share our view and taking up the question that we have received, and any question you got on the live chat here or during the direct interaction of this event. So today's event, beside me, the CEO of the FiinRatings, we have a couple of speakers joining us today. So first, I would like to introduce Mr. Paul Coughlin. He is the chairman of our rating committees. He has been working with us, with our team, analytical team, over the past few years, 2 years. And before joining us, he was working for S&P Global Ratings as a global head of analytics and operation. And the second speaker is Ms. Prachi. She used to be the director of financial sector rating at Crystal, the subsidiary of the S&P Global Ratings, and now she's working with us as an analytical advisor, especially for financial sector ratings. So she advised us, our team, on all analytical aspects in rating a Vietnamese company. And 2 gentlemen, Mr. Kwon, he is our analytical manager, and Mr. Hoa, he's our analytical manager as well. So both of them was leading the rating of MBS and Viet Capital Securities. So, and they will be the one who share with you about the issuer we have been released to the market, and you may have read our rating report or rating release. So it's a good chance for you to discuss and to put any further question to our analysts today. And of course, joining us today this is our own event, but we think it's good to have a kind of communication between the issuer and you guys, the investor as well, directly. So I would like to introduce Ms. V. She's the investor relation manager at the Viet Capital Securities, and Mr. Thiện, CFO. So any specific question about the company specifically, or even the confidential question, you may feel free to ask directly with the issuer. So let me go to the details. So we will spend about 2 hours, quite long for you, I think. So I hope you will stay with us until the end. So before talking about the technical issue, so allow me 1 minute to speak about who we are and what we are doing. So before expanding into the credit rating business, we, as a financial information provider for Vietnamese equity market and capital markets, so we have financial information with the platform for securities and institutional investor. And some of you are subscribing our system. Thank you for that. And we have business information as well. We analyze all private company, 1.4 million Vietnamese company, for trade and investment, for KYC and so on, by technology and by analysts as well. And we have a team doing the market research as well, especially the commercial duty for foreign investor doing the investment here. And of course, the credit ratings. And for credit ratings, we are the technical partner with S&P Global Rating for about 1.5 years. And they are working with us as well to develop the technical capability and methodology, and they are sending the expert here working with our team in Hanoi to improve our rating business and working with the investor, including you and the regulatory agency as well. We have been rating 12 companies, Vietnamese company, but we just announced to the market 8 over 12. So mostly real estate developers, 1 finance company, and 2 securities company, including Viet Capital Securities, A- stable, just we released 1 week ago. So in addition, working with issuer as a issuer pay model for our rating services, we are supporting a lot of creditors and investors as well through the credit assessment report and credit monitoring of their portfolio, especially for insurance company and the offshore investor where they have exposure in the Vietnamese capital markets. And we're providing them the full rating report as well under subscription model. So that's about us and what do we do. And now I would like to go into details, a lot of technical. So we will have around 5 sections. Firstly, it's about the market, what's happening. And second, we will talk about the key risks that the sector is facing. And then we will talk about credit differentiation and historical default. So we would like to address why rating matters to you and to the market. And we will have a project sharing some regional perspective as well about Vietnamese securities company. How do they compare with the regional players in India, China, and so on. And lastly, we will talk more about the 2 firm specific rating action we have released to the market. Of course, including the Viet Capital Securities with the ticker VCI on the Ho Chi Minh City Stock Exchange. And we will have a two section for Q&A based on the question we have received at the middle of the event and then at the end of the event. And of course, we are open for any question. So please put your question over the time when we go through the event by the chat room there, or we at the time of Q&A in the number 6, we will open for you for the direct conversation with us. We hope you are willing to open the camera and talk directly with us and with the issuer for any question or any concern you may have. So that's the overall content flow for today. So allow me to go directly with the first one about the markets update. So I will update very quickly about the equity market performance and fixed income. Specifically, it's the corporate bond market, especially with the new regulation just coming out, the Decree 65. First, about the equity markets. You may heard about the very low liquidity, but to us, look at the figure number 1. So the market's still, I think, very okay. So daily liquidity in the August is about 17,000 per day, and this September our data indicated around this a little bit lower number. But taking out the margin of the leverage trading, I think this market is running okay. And because if you look at the figure number 2, despite the low sentiment from the retail investor, so it means the institutional investor and the market is still going well in terms of the liquidity. And having said that, the securities company who rely on retail, domestic retail investor will be affected more than the company who serve the foreign, especially the institutional investor. And the sentiment of the retail investor recently very low, especially from the early 2022. If you look at the figure number 2, so they're trading very low liquidity and selling almost all the month and the week. So and remember, the market is a zero-sum game. So that means the institutional investor, especially the foreign and prop trading by securities company, they are the net buyer. Of course, the turnover is much smaller. So that's I think that's the liquidity and the performance, or liquidity and the participation from the retail investor. Those are the 2 very key important indicator for affecting the securities company performance. And let's move on the fixed income corporate bond markets. You may heard about the new regulation, very important, Decree 65, for governing the corporate bond under private placement. And it's a very too good to be true, actually, for Vietnamese bond market. After very small and thin issuance activity from January this year, only banks, credit institution, namely banks, they issue, and some real estate developers, they issue. Remaining is a very inactive. And that's question about the earnings quality and the outlook of Vietnamese securities company, especially the company who rely on the income from the fixed income market and the risk associated with from the bond trading and underwriting activities by those securities company. And in the later section, we could discuss more about that. But I would like to say there are some good news and bad news with the new regulation. The good news is that the market will be better in terms of transparency and the standard for the issuing the bonds. But the bad news is that the standard for qualified investor, or we sometimes call a professional investor, is increasing. And it's the average 2 billion for 6 months. It's not only 1 day or some point of time during they have the investment accounts. And that makes the demand for bond investment reduce, we think, in the short run. So that could be not something expected from securities company. But I think in the long run, it's a good for the market, for the bond market, because we need really the more institutional investor or the individual, but who understand the risk appetite and the risk of default and the quality of the bonds they're investing in is not only based on the coupon or the interest rate and make the investment decision. And of course, some good news for us about the mandatory ratings with a certain condition. So whenever the issuer, Vietnamese company who issue the bond with value, the total value more than 500 billion, around 20 million US$, and the total value of the bond over the past 12 months, more than 50% of its equity, That's the first condition. And the second condition, if the bond exposure is more than 1 times of equity, they need to be rated by credit rating agency, including us. So we hope with the rating regulation, we will support the market more transparent and support you as an investor, have preferences in your risk management, selection of the bond to invest, and pricing. So let's talk about, in that context, how the financial leverage of Vietnamese securities company are right now. So we look at the assets over equity. It's about 2.2 times by the end of June this year. And if you look at the exhibit number 5 here, the equity base of the Vietnamese securities company has been increasing a lot, especially over the last 2 or 3 years. And some people say it's very, alarming level, because they look back the last financial crisis, 2008, but we think differently. Because now the earning model of the Vietnamese securities company is not only based on the prop trading, it's not only based on the easy margin lending anymore, and they have a quite diversified source of earning. So we think it's everything under the control in general. Of course, there are a number of companies who have the leverage much more than this level and close to the maximum selling imposed by the State Securities Commission, but many other is still, under reasonable level, safe level, we think. And talking about this, I would like to hear some view or some sharing from Anh Paul, from your experience when working with S&P, and especially rating the top investment banking and securities company in the world. So sharing some view about this. Do you think it is highly leveraged, or what degree of risk for Vietnamese securities company based on this information and your experience in working with our team when doing the rating for Vietnamese company? Anh Paul, please. Couldn't hear you, Anh Paul.
Need to be, thanks.
Okay.
Thanks, Mr. Tuan. Yes, this is an interesting slide, and no doubt Prachi will talk some more about the fundamentals of brokerage companies. But obviously, brokerage companies live in an unstable environment, and as the markets rise and fall, so do brokerage earnings, and at the same time, probably margin lending revenues will fall as well. So brokerage firms around the world are in an inherently unstable environment, and that reflects on the way we think about these companies. However, if you look at the gearing that's indicated in this slide, in the scheme of things, if you compare this gearing with finance companies, consumer credit companies, and indeed compare it with other brokerages overseas, it's actually quite a conservative level of gearing. If you think about the, say, Lehman Brothers, when it defaulted during the global financial crisis, its leverage at that time was around 25 times to 1, so not 2.5 times. So I'd keep that in the level of gearing and its movement up in context. Certainly, the brokerage business is very cyclical, but as we look along with Prachi and the rest of the team, Mr. Kwan, we do look at the ability of these companies to manage their costs during a downturn. As you mentioned before, we look at their diversification of income streams, but in the scheme of things, I think this is actually quite for the average, quite a conservative level of gearing. And when you're looking at these companies, you do need to look at the individual company, of course, not just that level of gearing, but also their risk appetite as they go about margin lending, as they structure their business to, can ask the question, can they deal with the volatility in brokerage and other forms of income. So on the face of it, I don't see this movement in gearing over the past 2 or 3 years particularly concerning because it's off really quite a low base. I think the focus for the securities firms really ought to be on their individual practices and the individual risk management processes for each segment of their business.
Thank you,
Perhaps Prachi wants to provide a broader context there.
Prachi, do you have some quick sharing on or from your perspective on the financial leverage of the Vietnamese securities companies?
Right. No, thanks, Mr. Thorn. As Paul mentioned, I agree that the gearing levels that we look at in Vietnam are fairly conservative compared to what we see in other countries. And, you know, they in fact would be at a much lower level than what you would see in, let's say, in India or other Asian countries, which would probably be around 4.5 times. Yeah.
Thank you, Prachi. It's good to see Vietnamese company, securities company, under some you know, reasonably low leverage comparing to somewhere else. But of course, yes, it depends on individual company situation. We will discuss later. So let me move on. This charts, I think, very important, and we have few messages to would like to share with you. People, investor in stock market now normally think the Vietnamese securities company, domestic, I mean, not only the Vietnamese, but we have a lot of foreign securities company here, the Koreans and the other foreigners. I think the prop trading still now very at the small scale, but unfortunately, when you look at the earnings contribution, the income contribution, we still think it's prop trading still contributing a significant portion and the largest over the past 7 or 10 years for the income of Vietnamese or securities companies. So that's we think based with the current market condition, especially the sideways of the index performances and the very low liquidity, there will be some impact for the credit performance of the securities company currently and in the time to come. But the good thing is that margin lending becoming more, you know, part of the cake, and of course brokerage service as well. So having said that, the market risks, the index performance, and the outlook in the time to come will be one of the key factor. We are watching the market and how its impact for the performance of securities company, and for some weak company is about the liquidity issue as well, among the other factors. And it's worth to note here advisory or underwriting service, especially with the bond market, but the income still small, and we hope in the outlook in the next 1 or few years more to come, the asset management and the underwriting service, the earnings from those activity will increase further, and we will discuss in the later section about that. How about the profitability? So of the Vietnamese securities sector, we used to have a very high performing years. 2021 return on equity on average about 21%, very high comparing to regional peers, and higher than the banking sector as well, and much higher than many other financial sector. But in the first half of this year, it's already down to half of that. So what should be the next prospect by the end of this year and next year? We don't think it will be come back. It will be back to 20 or 21% soon. But let's talk more about in the later section, and what should be the key risks we need to monitor. And one thing to mention about when talking about the profitability of the financial sector players like securities company is worth to look at the cost to income ratio. So in the figure number 7, so it's around 49% and tend to be increasing. So that's another indicator we are looking at. And of course, we observe depends on the company and the business model. Some company, they have very low cost to income ratio, especially they apply the technology and digital brokerage. But some other coming up like 60% or even 70%. So depends on the distribution and depends on the company by companies. But on overall, if you look at the first half of this year and the outlook for this year, I think securities company, they have a very tough year and difficult years, I think, to come. And about the funding profile and liquidity, one of the issue of Vietnamese securities company is that they rely on very short-term funding a lot. So that's the issue. And if you look at the long-term debt, only 3% of the total capital mobilization, including the equity. So of course, the short-term funding from our research is used for the margin lending mostly. So given the current market low sentiment and low liquidity, so that's one of the queries we are looking at, especially the liquidity for some smaller companies. And as Paul mentioned previously, it's a good news that financial leverage of the securities company is much better than the financial institution. Of course, the banks and non-banks institution, they have a strict regulation oversight as well. But financially and from the risk perspective, we think the capital buffer from securities company in a good safe for now. In summary, my section, I would like to summarize the 5 key headwinds or the risk for Vietnamese securities company in the time to come, and we will make it clearer in the later section. But firstly, it's about low liquidity. That's affecting the brokerage income and especially the credit quality of the margin loans given to their clients, and affecting the new share issue plan. Many companies, they have a plan, but given the market condition, they suspended. So that's one issue we are looking at. The second, the sideways performances of the index. So that's make the prop trading portfolio more vulnerable to the market condition, and of course the quality of the margin lending as well, especially the company who pump money for speculative stocks and small and liquidity stocks. And thirdly, very important, especially some of you from securities companies, so you already observed how the impact from tightening monetary policy from the banks with some regulation for financial assets, including for the stock market. So, and in the meantime, the Vietnamese company, they borrow mostly from the banks. Of course, some company, they issue the foreign currency debt, but still very highly reliant on the banking credits, the credit line from the banks. So the policy development having impact on this as well. At least just not easy to borrow from the new money from the banks. Of course, at this condition, we don't think that the demand from securities company to borrow more could be big enough. And fourthly, it's about the high interest rate environment you heard about from globally and from the Vietnamese market, and the depreciation of the Vietnamese dong, which affecting the cost of funding from the Vietnamese securities company, who are borrowing from the banks, who are borrowing from overseas, and who issuing the corporate bond as well. So this something depends, of course, depends on the company by company, and depends on the level of exposure. So that's something we are looking at. But in general, it's one of the headwinds we believe the companies are facing. And lastly, the policy correction in the corporate bond market over the from the early this year, affecting the corporate performance, the earnings, and the I believe the liquidity of some smaller and weak company as well, because of the the financing the bond and selling the bond to the market, and they are buying back together with the issuer for the early redemption. So that's buying back the bonds. The Vietnamese securities company, they need some sort of funding. So that's affecting the financial leverage and financial situation of the Vietnamese securities company as well. So that's the key highlights, and we will discuss more in the later section by components and by group of companies. So that's my part, and it's more about ice breaking. And I would like to introduce Mr. Kwon, our analytical manager, to discuss and share with you more about the key sector risks based on the business model of Vietnamese securities company service. Hello, Kwon. Can you continue?
Yes. Hi, Anton. So thank you, Anton. Based on what Mr. Thuan has presented on the current market landscape and outlook, in this section, I will provide our firm's view on the key risks that the securities service sector is currently facing, as well as discuss FiinRating framework to assess credit risk profile of the securities company. Can we move forward? Okay, so in before this slide, yeah, go ahead, move forward, please. So, oh yes, so this slide shows our the FiinRating framework for assessing credit risk profile of a securities company. FiinRating follow S&P methodology of assessing business position, risk position, capital and earnings, and funding liquidities. In business position, we assess a securities company business stability and diversity. When assessing stability, we look at their market share in brokerage service, the company track record, their growth, as well as their business mix. They are more traditional brokerage company where they focus on brokerage and margin lending, or are they focus more on investment or prop trading? And are they active in the IB segment? When assessing diversity, we look at the company's product and services, their channel, as well as the channel and their client base. By examining these fields, we eventually can assess whether a company business position is helping or hurting its credit profile now or in the future. Sorry, is there any lag going on? Okay, sorry, I'll continue. In risk position, we assess the company's risk management to see if the company has a clear and structured policy in place, and if they are adhering to that policy. We do that by trying to answer the questions, are there any concentration in their investment in certain group or industry? What is their stop loss threshold? How do they select eligible ticker in margin lending? Are there any risk management system in place to monitor and enforce the policy? A company in place with regular monitoring for control. In capital and earnings, we look at the company capital scales and their gearing level. If their capital sufficient, are they gearing on the more or less conservative side? We also look at the company's earnings ability to see if the earning is stable or fluctuating over times, or if the companies are operating efficiently in terms of cost. Because the nature of credit rating is forward-looking, we also examine whether the company has any equity infusion plan in the future, how feasible that plan is, and we try to figure out how it will impact based on the assumption gathered from information and through our working process with the client. In funding and liquidity, we assess the company ability to raise funds to borrow from lots of credit institutions and at what rate. What are their credit limits at each credit institution and how much have they used? Are they able to raise funding offshore with longer terms and or lower costs? This also affects the company's liquidity, as many securities also borrow short-term a lot from margin lending. Along with our projection, we perform stress tests where we come up with realistic low case or worst case scenario to see whether the companies will have liquidity issue given a certain circumstance. Along these modifiers, we also look at the company management to understand their strategy, their risk appetite, as well as their ability and experience to respond to market volatilities while still remain competitive. This is because management have, in addition, because of the nature of credit ratings, we also perform quantitatively peer comparison, where we compare the company key credit metrics along with the sector and the selected peers who share similar characteristic and business mix. Finally, to complete our assessment, we examine any external influence that may have positive or negative parents' willingness to support the company and their ability to do so, as they are becoming more and more important to the parent banks. However, as we examine several cases of bank-backed securities company, we also realize that each of them have different influence level, and therefore bank-backed securities company do not necessarily have higher ratings than non-bank-backed securities company, because in the end of the day, a company's internal credit profile is still quite important. Can we move on to the next slide?
Already?
Yes. Yes. So in this one, we look at key risks that a securities company may face and their impacts on each of the business line. Obviously, as you can see here, each business is impacted by several risk drivers, but the impact level is quite different. For example, prop trading and margin lending are quite impacted by the market, by regulation, and by the company's own management, while the rest are somewhat less impacted due to the Vietnam security sector development in the last several years. We move on to assess the risk level for each business segment of the security services. Can we move on? Yes, so this slide is quite heavily texted with the assessment and rationale for each segment, but ultimately it comes down to three main points. The first point is that prop trading, which has contributed about 40% in both revenue and profits of the sector in the last 7.5 years, is assessed as the riskiest segment due to the segment natural dependent on market movement and therefore subjected to market risk. In our opinion, this segment will continue to be the most volatile segment of securities company in the near future, as the sector portfolio has seen a significant shift toward unlisted corporate bonds in the last few years. The second point here is that the security service, which consists of brokerage and margin lending services, is assessed as low to medium risk, with brokerage being low risk due to the business nature, and margin lending being medium risk, as the segment is impacted by many risk drivers, especially market, credit, and management. As the market is anticipated to maintain the sideways trend, as Mr. Tuan has mentioned, companies are focusing to compete more in margin lending for higher profitability, and with the investors' sentiment slowly recover, we view the security service segment as slightly optimistic in the near future. The third and last point is that underwriting, or IB, is also assessed as the low to medium risk, similar to security services. However, the segment is anticipated to significantly decline in the near future because of new regulation limits the pool of professional retail investor who are previously the segment significant customer base. The Decree 65 also make it more difficult for securities company as there are more steps involved and there are more information have to be disclosed. In addition, securities company may also face certain reputational risks to the public when the issuers are in trouble. Can we move on? So in the next few slides, I will go a bit more detail into each segment risk assessment. We'll start with prop trading segment. I'd like to draw your attention here to the graph on the left-hand side, which show the average return on portfolio of securities company prop trading versus VN index return in the last 7.5 years. There are two key points in this slide that I would like to address. The first point is that since 2016, securities companies prop trading yield, which is the yellow line, has been showing a more stable trend when compared to the market movement, which is the blue line that you can see. Due to the securities company own expertise and research capabilities, as well as tightened securities, who also adopt a long-term investment strategy that also get movement. This is a quite positive sign considering this is the most volatile segment in the sector. The second point here is that since 2018, there has been an increase in securities company in 2021 period when investment in unlisted bonds doubled. In the first half of 2022, this figure dropped back down to 2019 level. We'll go more into details on this in the next slide. Go ahead. So this graph in this slide shows the top 10 securities companies in terms of corporate bond balance as of the end of 2021. We also show the bond balance in the first half of this year, 2022. Here, either decrease or maintain approximately similar level of holding in corporate bonds. The other half increase their holding in these C bonds. Now, to really understand and accurately assess the risk level of each company here, we would really need to examine their corporate bond portfolio and see the in and out of these bonds during the first 6 months of 2022. And normally when we rate a company, we would acquire this information. Another point I would like to address here is the proportion of corporate bond balance. Sorry, what's that?
When and then we would like to hear some view from Paul and Pricey on the corporate bond exposure and on this slide.
Sounds good. Sounds good. Another point I would like to address in here is the proportion of corporate bond balance of the securities company compared to the equities level. As you know, here the circular 121 requires securities company investment in corporate bonds to be less than 70% of their equities level, and some companies are approaching that level. If the companies want to hold more corporate bonds in the future, then they would need to raise the equity level. This, along with the regulation on margin lending cap, would explain why there has been an equity infusion trend among securities company in the last year. Yes, Anton.
Yes, I would like to hear some comments from Paul and Pricey about the quality of the Vietnamese corporate bond. You might heard about from our rating action, and given no secondary market for liquidity. So how do you think the impact for the performance of the securities company who are holding significant portion of the corporate bond in their balance sheets? So like this.
Well, I'll say a few words, then move on to, perhaps we'll let Prachi go into more detail. As Mr. Kwan was saying, I think the key thing is getting to know what's in those portfolios of bonds. Obviously, a lot of the issued corporate bonds Well, I guess there's two groups. A lot of the banks issue bonds, and generally we would assess most of those as being relatively low risk. On the other hand, you do have a large volume of bonds issued by property companies, which is traditionally a relatively high risk business. As the world gets more correlated, as markets turn down, you probably will have real estate markets turn down at the same time. So these risks of business volumes falling and risks within the bond portfolio will probably go up at the same time. But as Mr. Kwan said, the key thing that we would be looking for is not just the actual volume of bonds, but exactly who the issuers are and the degree of risk there. And again, looking at the liquidity makeup of the company itself. So most of their debt is short term. That's quite well matched with margin lending. If, on the other hand, they're borrowing short-term to fund long-term corporate bonds, that's obviously a liquidity risk that we would be concerned about. So I'd emphasize you really do need to look at each of these securities companies and get that sense of what exactly what names they've got in their portfolios, how they're funding it. Prachi, would you like to talk some more?
Yeah, sure. Thanks, Paul. So, I mean, just to elaborate what Kwan and Mr. Paul has mentioned, it's very important that we assess the quality of the corporate bond portfolio on an exposure to exposure basis. And this could be having varied levels of risks, as they could be different quality. Inherent quality of the issuer of these bonds is extremely important. We also look at sectoral exposure. Let's say a company is heavily invested in corporate bonds to a particular sector. In most cases, this would be property companies, as Paul is mentioning. It can be fairly risky. If there is a market downturn, of course, the broker is impacted because of low volumes on the business side. And again, because of a low downturn in the market, these corporate bond portfolios could also be impacted. So it's like a double whammy for the broking company. And that's why, we take this as a very central factor in our analysis and evaluate exposure by exposure basis, what sort of a quality of portfolio the company is holding, not only currently, but also what we expect in future. And we incorporate that into our ratings. Thank you.
Thank you, Prachi. So, Kwon, do you want to keep going with brokerage?
Yes. So for brokerage service, I'd like to draw your attention to the graph on the left-hand side, where they show brokerage service revenue over the years, along with the brokerage service margin. 2021 was a very good year for securities brokerage services, where the average daily liquidity was around 25 to 26,000 billion, almost 4 times higher than 2020's, when the average daily liquidity was around 7,000 billion. The first half of 2022 is looking good, even better than 2020, simply because the first quarter was still good, continuing the trend from 2021. However, with what happened in the second quarter in 2022, and with our view that the market is maintaining the same sideways trend and maintain the same daily liquidity level of Q2 and Q3 2022, then it is likely that the brokerage revenue of 2022 will not meet the 2021 level. In addition, securities companies who rely on their retail client base will have their brokerage revenue somewhat more impacted by the retail investor lower sentiment in comparison to companies that have higher institutional client base, still quite stable due to its fee-based nature, and we maintain our view that this is one of the less volatile segments. For margin lending, I'd like to draw your attention to the graph on the left-hand side. After its peak in the Q4 2021 and Q1 2022, the lending balance also has started to decline since the second quarter, sharing similar trend to brokerage services. Obviously, this will affect earnings and business of securities company, but from a credit rating perspective, we don't view this as a negative sign. As the markets decline and we anticipate it to maintain the sideways trend, the fact that lending balance is reduced show that companies, they are not increasing their risk appetite, and by lending less, they would also reduce their short-term borrow at credit institution, and this will ultimately lessen the pressure on their liquidity position. However, we do anticipate that the competition in this segment will increase as the investor sentiment recover, and many top securities company, they are raising equities to increase their capabilities to prepare for this. And with this, I'm going to pass back to anh Tuấn.
Thank you. So thank you, Quân, for presenting the risk assessment on each of the four main components of the securities company's model. So now we have received a couple of questions from audience. So we divided the question into two groups, and this is the general question. So about the market and about overall issue. So I would like to go to some of them, and would like to hear the view from the speaker here, and then we will go into some other topics, the next topics at the program. So first question, the people ask, given the low liquidity of the market since early this year, so what are the impact to the earnings of Vietnamese securities company in this year and the year coming? So anyone to have some comments on this?
Hello, Ingson. I think I can address this question. So as Mr. Quân mentioned, the brokerage revenue is some kind of main source of income for securities firm in Vietnam. So of course, the low liquidity of the market since early 2022 is having a negative impact on the earning result of Vietnamese securities firm. But notably, even though the liquidity level has decreased in comparison to 2021, it is still much higher than the previous 6 years. You can see from the figure, the daily liquidity is now like 17,000 billion daily. It is, I think, a remarkable increase from the previous level of, I think, less than 10,000 billion daily. So of course the earning is affected, but still it is a stable profit margin sector, and I think the profitability is affected, but not to the level that it will cause a huge negative impact to the operation of a Vietnamese securities firm.
Thank you, Hoàng. So our data show that the forecast, the expectation on daily average for Vietnamese stock markets this year around 25,000, but finally it's not. But now currently it's about 13 or 15. We think it's still good, given the very low margin or leverage trading. So let's come to the second question. Many securities company firms have profited from corporate bond trading in 2021. But this year, the very low issuance activity. So how the situation will have an impact for the sector, and what type of companies in 2020 will be affected, or in a good way or bad ways? Quân, do you want to take up this question and have some sharing to the audience, to the people who ask, a fund manager?
Sure, anh Tuấn. So 2021 was a peak year, right, where companies, they were able to generate a good portion of their revenue from the IB segment, as well as the prop trading segment. So in here, they whatever the bonds that they can issue, they can distribute to the investor for IB segment, but also the bonds that they were holding. They also generate a good amount of interest for the prop trading portfolio as well. So in 2022, with the low issuance starting in Q2 will no doubt affect the underwriting segment of the sector, because if there are less issuer issuing bonds, then there was little less source of income in that segment. In addition, with the new regulation limits the pool of professional retail investors who are previously the segment very significant customer base. So that will affect that as well. And the Decree 65 make it a lot more difficult for securities company. There's a lot more steps involved in the process. There are more information that they have to disclose. So overall, in the short term, this will impact the underwriting activities, the company in the sector, especially the one who has been focusing on this sector, on this segment. However, in longer term, we do expect this segment to recover as the companies will familiarize themselves with the new process, the new processes they have to go through, and of course, there's still always demands for issuers to issue bonds, to refinance, as well as the bond with good and decent quality are still very good investment or instrument for the foreign investor, creditor, as well as many investment funds. So there's still the lots of demand for the bonds in the future. So I would say that in the near future there might be some it will take some time, but eventually it will recover.
Thank you, Kwon. But I personally see some observation there, some risk there actually for the securities company who are holding bond on their portfolio, especially when early redemption with the court calling back to selling back by the investor, and depends on what type issuer. If the securities company who are holding the private bonds or by not so good companies, project companies, so that's something to be an issue. So I would recommend the investor to look at exposure, bond exposure, as we showed earlier, one by one. But the other point I think is good point for the markets in the time to come, for the company who have not involved heavily in the bond trading or issuing or underwriting. So that's the chance for them to step in this market with a better legal framework and better transparency in the time to come. So we have few other questions, but maybe we should skip this. Do you think? So for the Decree 65, we already addressed already. And maybe I take one more question, number 5. Here from risk management people from a local bank. So may I put question to Kwon again, if you can? Because many Vietnamese or local securities company who borrow from the banks in Vietnam. And the State Bank of Vietnam has recently imposed a number of measures to limit the credit exposure for financial asset and for trading the securities. So will that cause the liquidity issue for some company, especially at the current market condition? Kwon, any comments or any opinions addressing this question from the risk people?
Sure. So sorry, so my there's certain issue with my internet, so I'm gonna answer that through Huang's computer. So I think this is a very good question. then, obviously it will cause, certain liquidity issues for some securities company. But from our assessment of the whole sector, I think for many companies who have strong funding, who have strong capital base and funding ability, they will be as long as they reduce their exposure on corporate bonds and margin lending appropriately with the movement of the market, there wouldn't be. I don't see I don't see the top securities company having this issue, and the smaller, very small company, securities company, they don't really borrow a lot, and mostly they just utilize their equities for their activities. So those companies, they shouldn't have this problem either. Mostly the mid-size securities companies who are utilizing and the companies who tend to have lower leverage level would be impacted by this situation.
Thank you, Kwon. I think we have few other questions, but I think given the time, I would skip that. So now let's move on the next sections about credit differentiation. So we have talked about the market, and we have talked about the sector performance and the key risks that the company are facing. So let's talk about ratings, or credit differentiation, and why rating matters. So I would like to call Kwon and Prachi to share to the audience our rating analytical work for the securities service sector, and the the historical default or proxy of default happened in the market for the understanding of the investor and the meaning of our ratings. So Kwon, please.
Sure, Anton.
So go quick, Kwon. Sorry. So maybe not every details.
Yes,
we overrun a little bit.
Yes, of course. So in this section, we'll cover the credit differentiation of the sector. In this slide here, if you can find on the left-hand side, our distribution of the indicative standalone credit profile. So without any external influence of the 58 active securities brokerage company in Vietnam in 2021, that cover about 99% of the sector figures. Please note that the distribution is purely quantitative, based on public information of this company, incorporated with key credit matrix that FiinRatings used to assess securities company. And this is also note that this is a very condensed distribution without detailed notching level, plus or minus sign. In the detailed distribution, the standalone credit profile of this securities company vary from A to BB minus. The key points we're trying to make here is that while majority of securities company are currently above investment grade level, which is BBB minus and above, which is a good thing. A good portion of those are only a notch or two above the speculative grade, and their credit profile can be severely impacted by major downturn in the market. Since the credit rating is relatively new to the Vietnam market, we also include an explanation of what this letter A or BB or BBB means. What's the difference of the company that has a standalone credit profile in the A category compared to the BBB and BB category? Simply put, a company in the A and above category would be able to withstand a major market downturn event without facing liquidity issues in comparison to BBB categories, because they have a very strong business position with stable earning, solid risk management policy, and strong capital base and funding ability. While companies in BBB category would have an adequate business position and stable earning, but their risk appetite might be somewhat higher, maybe because they're trying to grow, but their risk management is still somewhat solid. Their gearing level might be high, but they also have strong capital base and plan to fund their business. So this company in BBB category would be able to withstand the less major, the minor economic fluctuation compared to company in BB category and below. Prachi, is there anything you want to add here?
Yeah, I mean, I can offer a regional perspective here and also kind of give a sense of how this BBB looks compared to, let's say, some other country ratings. And essentially, as Kwon is mentioning, this BBB rating is like our assessment is like a two-layered assessment, and it does factor into the fact that this particular sector is exposed to various risks such as market operational regulatory risks, and also the fact that securities companies are inherently volatile and do not have the benefit of accessing diversified forms of funding, unlike a bank, which is why you see that our anchor rating for securities companies is 2 notches lower from our bank anchor rating. And this is in line with what you would see in other countries. Just to give you an example, the S&P Global's securities anchor rating for China is actually in the BB category. And for Japan, US, and UK is in the BBB, mostly on the lower side of the BBB category. So these ratings really indicate that there are various forms of risks which can be heightened given the uncertainties of the market movements. Even in India, when you see the ratings for securities companies, they would mostly be in the BBB rating category, that too on the lower side, like BBB minus. So I would say that our assessment is in line with what you see in other global rating agencies, and adequately factors in the risks that these companies and the industry face.
Thank you, Prachi. So how about the rating and pricing, Kwon and Prachi?
So if you go to the next slide here, regarding rating and pricings, we perform a simulated comparison between the 10 securities company. We can call it sample size, standalone credit ratings, and they recently issued 24-month bond coupon rates to see if there's any relationship between them. We can easily recognize that here the companies on the left, the issue on the left-hand side, the one on the left-hand side who have rate who are 1 or 2 notch above anchor from BBB plus, A minus, or A are currently issuing at 7.3 to 8.1%, with the exception of one company. And the companies on the right, majority of them who are 1 or 2 notch below the sector anchor, so BBB minus and BB plus, are currently issuing at 9 to 10%, with the exception of one as well. So the inconsistency or the outlier, in our opinion, are because the rating is only standalone profile, so it doesn't take into account the full external influence, and also because there is a current mismatch between the coupon rates and the issuer credit risk profile. So based on that, we can conclude that there is certain correlation between our rating score and the issuer coupon rates.
Thank you, Kwon. And for the information, everyone. So we are the rating agency. We don't do the pricing because we have been requested by some of the investor. Hey, what should be the reasonable pricing or interest rate for this bond in order for them to buy or to negotiate? So the answer is we are not the pricing agency, and we are not giving the advices or recommendation on the pricing, but we do share our rating scale and historical default for the investor doing their pricing preferences. And of course, it depends on the terms and condition that they are discussing with the issuer. Here is a local securities company as well. And we do provide the mapping or some reconciling between our domestic rating scale and international scale especially for the offshore investor, for their understanding and using one of the input for their pricing. So it's a process going on, and we as long as we have more rating universe and historical data on default, so we believe we can support you better in the years to come. And next, so why rating matter? So Quân and Prachi, you want to quickly mention this very complicated slide?
Sure, Anton. When we look at the we do look at the sector historical default in the last decade. Many companies, many securities companies are established in the 2000s, but it's not until the early 2010s when there are a lot of companies established, as the barrier of entry for the sector was quite low back then. Our analytical team at FiinRatings did a kind of looking back study in this sector, and since 2010 there has been over 20 cases where companies went into default in our definition, with the most recent case in 2020, which is not that long ago. In our opinion, this is why credit rating matters, because while there are few cases of voluntary dissolution, majority of cases are caused by companies being financially distressed, and that would require termination, restructure, or regulatory intervention. And these cases are only recognized when it was too late. A lot of the audience here are creditors and investors of the securities company, and it's important I think it's important to monitor the credit profile of the companies, because not only the first time monitor the first time we rate, but also we do surveillance and we monitor the credit profile of the companies over the period of time. So that's why credit ratings matter. Prachi, anything you want to add?
No, I think we can go ahead. Just a point that I'd like to mention here is that this is the reason why we don't look at only the recent financials of a company. We do go back in time and see how the company has been able to manage up cycles and down cycles, because there could be companies which can go very aggressive when the market is going high and therefore can get into problems, or there could be companies which in a market downturn are not able to manage their costs and therefore can go under. So that's the kind of detailed assessment that we would be doing by really going back in history and seeing the ability of the management as well as the overall performance of the company throughout cycles. Yeah.
Thank you, Prachi. We got a lot of questions especially from the Vietnamese retail investor asking why ratings are important. I said, well, you are having a fixed income over the next 5 or 10 years. So you don't have any upside potential, right? So like the equity investor. So what would you care for? So it's about the possibility, the issuer, the company failed to pay your interest and the principal, and the default or a similar net event like this is very important. So our rating is to track the forward-looking and that's kind of possibility from our rating scale and outlook and the credit watch and so on. And that's our profession. So it's quite new for Vietnam, and the audience, we are educating the market as well. So let's move on. The next, Prachi, can you spend a few minutes, I think 5 minutes, sharing regional perspective when looking at the Vietnamese security service sector to the audience, please?
Sure. So basically, I'll try to give you a perspective of how the performance has been for various Southeast Asian countries over the last few years and how does it compare with Vietnam's story. So I'd like to draw your attention to the chart on the left side, which essentially indicates the movement of the equity market cap as a percentage of the GDP. So as you would know, as the country develops and shows strong growth, the volumes traded on the stock market would also grow. Vietnam equity market has, of course, as we have discussed, shown strong growth in the last decade, essentially on the back of listing of large banks and corporates, and that really has caused the growth. Securities market has also now become an important source of funding along with bank funding in Vietnam. So you see that the market cap to GDP for Vietnam has been inching up consistently at a fast pace since 2016 and has rather surpassed its peers in 2021. Of course, this is an exponential growth that we are seeing, but we do expect, as we have discussed earlier slides, that there's going to be a moderation in 2022. The equity markets nonetheless still offer good growth potential over the medium to long term in Vietnam. When I look at the chart on the right side, it really indicates the trend in the stock market turnover, which is the value of the shares traded as a percentage of the market cap. So a higher ratio really indicates the higher ease to buy and sell shares and is therefore an indicator of liquidity. As you can see in this chart that the Vietnam stock market liquidity is stable, but it still does lag a bit behind its regional peers. We can move to the next slide. Okay, so this slide is a comparison with India because we do believe that that the demographics and the growth story is very comparable to that of India, and you see in both the charts, the top one being for Vietnam and the bottom one being for India, there is a consistent inching up on the number of investor accounts in both the countries. So in Vietnam, what we've seen is that the economy has been growing at a good pace. There has been sophistication of regulations as well as higher retail participation in the past, which we are now seeing is a bit muted. We do believe that there's going to be some correction here happening, and also the rising interest rates and inflation could have a bearing on this growth trajectory. In India, also what we've seen is that the retail participation has been very healthy, systemic liquidity has been strong, and there has been a strong usage of internet penetration, which has caused this growth. And especially, you see there's a record number of 97 million investor accounts as of end of Q1 2023. Also, the discount brokers have played an important role in this growth story, as they have been offering no frills basic discount basic accounts where a lot of these first time young investors have got into the net of investing. So this really has helped in the growth as well. And of course, the penetration levels in India still remain at 7%. So we do believe that there is good growth potential. This is not a new chart. Mr. Tuan has shown this chart on the left side for Vietnam. What I want to show and is the key takeaway here is in terms of the revenue mix or the revenue composition for Vietnam versus China. So we have discussed that Vietnam is heavily dependent on broking and proprietary trading as a source of revenue. When you look at China, of course, this reliance on prop trading is much lower, and there is a sizable contribution of other lines of businesses like investment banking and asset management. So we would like to see that there are newer lines of businesses which securities companies can get into to kind of insulate themselves against any major market movements, and having a stable fee sort of income in future by getting into these segments. Even in India, if you see, about 70% of the revenues for broking companies do come from standard traditional broking business. So it's pretty much in line with what you see in Vietnam.
Thank you, Prachi. So we have half an hour left. So let's talk more about specific companies that we have rated. So Quân and Hoàng, are you ready?
Sure. So
for MBS, I think we already announced a few months back. So maybe you go very briefly, and let's focus on Viet Capital Securities and discuss with the investor here, and allow the people from the issuer, the company, to talk as well.
Yes, good point, Tuan. So as mentioned, MBS and VCI also both have the ICR issuer credit rating of A-, but their stories are quite different. For MBS, there are several credit strengths here, but the one I want to highlight in the next slide is that MBS is strategically important to the parent bank And as a result, the company benefit from the parent bank management experience, technology, as well as the most importantly, the significant customer base. Okay, we move on to the next slide, Anton. And yes, so as you can see here, the MBS and MB Bank have very has a medium economic linkage, but the parent bank has very high moral obligation according to our framework to support the subsidiaries company, and that's why the issuer have we give them 3 notch up for external support in this case. So I'm gonna move past to Huang to talk about VCI.
Okay, so it's my honor to be the lead analyst for the Vietcapital Securities rating action. So I would like to explain the our assessment on VCI credit score. So if you look at the rating snapshot, you can see how we derive at the issuer credit rating for VCI. As Quân has mentioned in the previous part, the our anchors for securities companies in Vietnam is BBB, and we think that VCI has a strong business position as well as the good funding and liquidity position. So that's why the final score for VCI is 2 notch higher than the anchor for a securities firm. We believe that the credit strength for VCIs come from their leading position from the well-diversified revenue stream. It is well-established institutional client base that have somewhat more limited impact from the downturn in for the decline in liquidity level. And also its long-standing investment banking and advisory activities, we think is the key for their business success. Along with that, we assess that their debt profile right now is advantageous in comparison to others securities company from their low cost foreign syndicated loan and credit line from domestic banks. But on the other hand, VCI has some limitation to the credit score. We acknowledge that the investment activities is a integral part of their value, their business value, but the exposure to unlisted equity position, which is more illiquid, is a constraint to the rating score. Also, in the past 3 years, the decline in brokerage market share due to the retail, due to the fiercer competition is also a limitation. So in the next slide, I would like to explain our detailed assessment of each segment, business segment of VCI. For the brokerage activities, they have the leading position for institutional brokerage with top 1 market share in the last 3 to 5 years. The market share is about 25 to 30%, and they have the long-established reputation for that, especially for foreign institutional clients. For the retail segment, they consistently rank in top 10 in terms of market share, and their target client right now is high net worth client acquired from the IB and advisory relationship. Moving forward, for the margin lending segment, we assess that they have the conservative margin lending policies with only 166 stock ticker in comparison to like the average number of more than 200 tickers. We believe that the highly speculative stock are not allowed for margin lending, and it is I think very prudent risk management practice. The thing that I want to highlight next is the investment activities. I think given the VCI exposure to investment activities, as is account for like half of their operating revenue, we believe that the risk management capability and the investment philosophy is a key factor when we underpinning the risk profile of VCI. We assess that VCI investment team focus on long-term strong fundamental companies rather than speculative trading, and it is quite somewhat different than other companies. I think the advantage come from their IB relationship and also the strong research capabilities that they can keep looking for good investment activities. Although the large exposure on unlisted equity is a constraint, but they are all the position are leading players, leading company in their sector with strong fundamental, and that's why we think that VCI has a strong capability to withstand a major economic downturn. And for the last part, the investment banking and advisory service, although the contribution to the revenue and the profit is minority, but we think that it is the key for their business success. They are the leading IB house for IPO and M&A advisory service with long list of mega deal in the last 10 years, and the strong relationship with other clients and prominent players is a huge quantitative advantage for VCI. So that's basically the our assessment for VCI credit highlight. And you can see from this table is the credit performance versus peers. We use the figures to demonstrate that the effect from the current low liquidity level is somewhat limited to VCI. First of all, in terms of profitability, you can see at ROE first half 2022. It is not annualized, but only for the 6 months. They can still maintain the ROE at 10.5%, or annualized is more than 20%. It is still a very good level in comparison to the peers. Also, the debt to equity reflected the financial risk profile is lower than peers. So I think that the two key evidence that we believe that Viet Capital Securities will have a relatively stronger credit performance in comparison to peers.
Thank you, Hoàng. I have a question here. Probably anh Paul Prachi want to take up. Why FiinRatings are rated so high, A class for those two securities company, especially at this market condition, a Vietnamese stock market, they mean. So anyone, or anh Paul Prachi at the committee chairman?
I'll start. Yeah, I'll start and then hand it over to Prachi. The thing to note is, as we've said before, brokerage companies exist in a very volatile business. The market, you can count on the market going up and down, volumes going up and down, and that's life in a brokerage. And the question is, does the brokerage and its business model cater for that volatility in business? The ratings wouldn't be much use if we put the ratings up a whole lot when business is good and then take them down when the business goes into a downturn. What we're looking at in the brokerage industry is a business that inherently has its ups and downs. And we are trying to look through that and say, can the business survive the downturns and prosper? And our view is, obviously, for VCIs, that given the particularly given their business base, given their level of equity, that they can survive the downturn in the marketplace. And I think that's the key part, is not to imagine that they're not going to suffer from the downturn. They clearly will, like everyone else, but I think we can expect them to survive because of their substantial equity base, their management of liquidity, and because of their conservative risk management policies. So I think that's the key points there. Prachi, did you want to elaborate?
Yeah, I think most points have been covered. So I want to re-emphasize that risk management and the adherence to those risk management policies in terms of, margin requirements, LTVs, debtor and single party or sectoral exposures becomes extremely important. And what we see in VCI's case is that the risk management policies are very comprehensive as well as conservative. Of course, they do have equity investments, and a large part of that is in unlisted securities. But we have always done sensitivity analysis for securities companies, wherein we see that if the market was to go down by an X percentage, how does the company's performance get impacted? What is the kind of liquidity it would be having at the end of this sensitized scenario? And what we see in VCI's case is that the situation is still comfortable, and we are quite satisfied with our rating category that we have offered for the company for the reasons that have been mentioned earlier.
Thank you, Prachi. Probably the people think, when talking about securities company, they always thinking about the equity market or index up and down every day. And of course, the earning model by securities brokerage firm now is quite diversified, as we presented and to the audience
I'd just like
today.
to add one more point here, is that, of course, let's say in the case of MBS, to the investor, the rating appears at an A category. It needs to be, as Kwan mentioned earlier, be viewed in conjunction with the standalone rating. And to give you an example of ratings in India, a lot of securities companies are held by large banks. And because there is a high moral and economic linkage that these companies, the securities companies, have to their parent, the ratings are notched up at a fairly high level. In some cases, it could be in the high safety ratings, which is why, it's important to look at the ratings both at a standalone level as well as at a issuer rating level.
Thank you, Prachi. We have few questions here. Maybe some question to the company as well, to Viet Capital Security as well. But I think I should pick up one question from audience first, and then we go for the question to on VCI specifically. There's one interesting question here, number three. Yes. So why VCI and also MBS are not always on the top 5 brokerage firm in Vietnam? So why they are rated so high? So can top 5 market share player with will have AAA ratings? So Quân, do you want to take this question from the audience? They send to us when they do the registration.
Yes. Sorry. Sorry, there's some small technical issue here. Okay, I'm back. So first of all, the A minus. I mean, obviously, the like I said before, VCI and MBS, they are not, okay, they're not in top 5 in terms of market share. But market share is not the only factor that we look at from the credit risk perspective. Obviously, when I was going through the framework before, I was talking about how, when we look at business position, right, then market shares definitely play a major part in business position, but that's only one modifier. We also, for credit rating, we have to look at the whole picture, where we that's why we have the 4 modifiers to cover these fields. And for as you can see, as there are many cases in company that are in top in terms of market share, but maybe their earnings are not really high. Their then it will affect their overall credit profile as well. Or if they have very high market share, but their risk appetite is high in their investment and their corporate bonds holding, then that will also affect their credit score on, or if they have some liquidity issues that we identify after we've done our projection, then that will also affect the rating as well. So yes, if you look at the distribution in the slide before, you can see, you know, these among those 58 companies, you know, they go all the way, their SICP distribution go all the way from A to BBB to BB minus. And yes, there are some company in the A category that, you know, they have a top in market share, but surprisingly, some of the companies they are in top 5 or top 10 or even top 5 market share, but they're not in the A category. So and obviously for issue credit rating, we also look at external support as well. So some companies, they will have positive influence from the parents, while some company may actually have negative influence from the parent as well. So that's something that we have to look at case by case.
Thank you, Kwon. Actually, the market share, yes, is not the only criteria when we look at and assessing the from the rating perspective. And it depends on the strategy of the player by player. Some they are the market share pursuer, and some they are not. So depends on, and what we care more is about, you know, the long term and the efficiency and the credit risk to creditors as well. So I think yes.
Just to elaborate a little bit on Mr. Kwon said, and to be very clear about this, it's highly unlikely any securities company is going to be rated AAA unless has the virtual guarantee of a AAA rated player. As we were saying before, it's an inherently securities firms are an inherently risky businesses. They're very volatile, and they just don't have the industry characteristics that support a AAA rating. So we need to be clear about that and be very clear about the expectations about where securities firms, no matter how good they are, and VCI, for example, is very good. But we have to be very clear that the nature of the business itself precludes these companies from getting to the top of the rating scale, no matter what their market share is.
Thank you, Paul. So we have few questions here to, I think, quite specific to VCI. So I think we have around 20 minutes left. So maybe let's spend some time with the company here, VCI. So V, are you there? Or are you there for taking up some question from audience? Hi, V. We couldn't hear you.
Okay.
Okay, got it. We have few questions from investors sent to us before this event. I'm not sure whether you are willing to share, but there are some questions. May I read out here? What are the impact from the new decree 65 to the investment banking business by VCI? I think they mean the corporate bond.
Yeah.
And the second, they ask about the exit plan. I mean, when you are going to sell the IDP, the investment item is quite significant on the investment portfolio by your company. And the next two questions, quite specific. What's the financing plan or issuing the new FC foreign currency bond in the time to come? And I think the last one is quite specific about relationship between your company and the Viet Capital Bank. So why do you have the mother bank security, but the trading client could not be integrated with the banking service like some other, I think. So can you help share some, maybe depends on your confidentiality policy. So can you share your view or answer to the question they ask, if possible?
Yeah, thank you, Anton. First of all, thank you, FiinGroup team, for having us today on the webinar. Also, thank you all of our attendees for joining the webinar today. So there's a lot of questions. I believe the first question is regarding Decree 65, which is the corporate bond, the new decree for corporate bonds. So as FiinGroup team has already shared in previous sections, the Decree 65 actually just the making adjustment as well as more addition regulation compared to the old decree. And we agree with FiinGroup teams that these changes and additional regulation in Decree 65 do and will help the environment, the corporate bond environment, and also the market participant to have a more sustainable development for bond market and also for financial market in general. So we do believe that this is a very encouraging move for the market in general. For VCI in specific, our IB activity has not we do have some activities for bonds regarding our IB department, but it's not yet a deep and broad activity yet for our investment banking segment. However, we do see a lot of potential from these from the bond segment, and therefore we will be very open for new opportunities, but also very selective on choosing the corporate as well as how we structure the bond, as well as how we structure and sell and advertise the corporate bond to our clients. So I think in summary, I would say that we are open and we are very eager for new opportunity within bond segment for VCI in specific. But like any other different segments of our company, we'll be very careful and prudent when we approach the business. I hope that answers your questions. So the second questions, I believe, is regarding IDP. So for VCI, we the way we approach our investment portfolio is that we have a part of it is prop trading, the traditional prop trading, and then we have a part of our investment portfolio is delicate for long-term investment. And when we say long-term investment, it means that we go out in the market and we find companies, not listed companies, that we believe to have to benefit from a future trend in the next 5, 10, 20 years. And we make an investment in this company, and therefore we hold this company for very long term so that we can realize the growth and the potential when these companies grows over the next 5, 10, 20 years. So with that kind of approach, our IDP investment, as well as other investment, long-term investment in our VCI portfolio, we want to keep it long-term. And for IDB in specific, we haven't had any plan for exit yet at this moment. Obviously, in the future, if the company reach our expected returns, or we believe this is a good time for exit, and we will consider the option. But for now, for IDP, we doesn't have exit plan yet.
Thank you, V.
Yeah. Can you remind me of the third question?
So next question is a financing plan. So is the VCI planning to issue more foreign currency debt in the time to come or not?
Yeah. So most of our previous offshore FX denominated loan, mostly all of us USD denominated loan, around 115 million USD. Most of the amount is used to fund margin lendings as well as other activities of the company. Our approach to this is that we will continue to seek for low cost offshore funding to service our activities. However, we are, like I mentioned before, we will be very prudent in taking more debt because we want to make sure that our profitability and the efficiency of the debt that we borrow should be maximized. So this is one of the reasons why you will see that VCI is one of the very few securities company that haven't had new capital raising over 2020, 2021, and 2022, because we, in our philosophy, we believe that using debt financing, especially when we are at a very healthy and low gearing level, then using debt to finance our margin lending and other activities would be a more efficient way to our shareholders as well as to the company. So that is why we are very keen on more opportunity to take on offshore loan. But before we take on any other new loan, we will make sure that the use of fund is the best of the company and our shareholder.
So how about the last question about the integration between the banking partner and
yes,
and the securities?
So this is a very old, but sometimes it pops up, is that is big capital banks has any kind of support or business integration with us. So we want to take this opportunity to be very clear, is that big capital bank and big capital securities, VCI, is a two separate and independent entity. So we do not receive any kind of special treatment, or we don't have any kind of integrated activities between the two entities. So that is one thing that I want to be very clear. We, as VCI, we do have some cooperations with other banks. So we have cooperations for additional services to our client with banks like BIDV, Techcombank, VB Bank, and some with big capital banks, but more on only on the corporate cooperation side. So there is no ownership integration or business integration between big capital banks and big capital securities.
Thank you, V. So I hope it's clear to the one who put the question to us before this event. And we still have few questions, but now I would like to open for direct question. Any direct question from the audience here today?
Yeah.
So anyone from the audience here would like to have open up the mic or your video and talk with us or put question to us or the company VCI here? Okay, so it seems to be no. So I would like to pick up one question from the live chat here. So there's one question here. Hi, FiinRatings, securities service sector company are raising their outright capitals. How will activities affect their credit ratings? I think it's simple. The more capital from the owner's equity, the lower leverage. So I think, of course, for the rating, it depends on many other factors and criteria as well. So, and we have few questions, but it's quite generic question. So we have one technical question here. Not sure Kwon or Prachi want to take it. Do securities company in Vietnam have equivalent to risk-based capital management, especially for their unrated or unlisted bond holdings? And how do they mark to the market in their books, given the limited or no liquidity for secondary bond trading? Or let me answer this question. So yes, there's a number of issue for bond market here, secondary market, not yet, except for around 30 bonds listed on Hanoi, previously Ho Chi Minh City Stock Exchange, and thousands of bonds remaining private bonds, and no references for pricing. That's number one. Of course, liquidity is another issue. It's mostly over the counter between the clients and the underwriter or securities company. And between the investor and the issuer, they trade privately, and no official market for that. That's why the pricing is mostly based on the cost historical, based on the coupon and the repayment schedule. Of course, some of them are using our rating results and for pricing to comply with the international risk management practice and so on. But I have to say, based on our observation, risk management for bond here is quite premature, and depends on the strategy of the company by the companies. Like VCI, they haven't got the exposure much in the corporate bond, but some other, they have a big exposure, not only, and some other, they have an exposure on the private bonds. It means not listed company or not listed bonds. So the risk for liquidity and the risk for those private bonds generally higher. So we have shared our view on throughout this event today. So that's very critical areas investor or creditors or your organization need to care about when assessing any Vietnamese securities company, not only the prop trading, but the bond portion as well, and credit risk, and of course liquidity risk to the company operation.
Yeah,
So
I'd
any
like to
yes.
add here that, of course, like you mentioned, credit risk would be something that we would assess while looking at the bond portfolio. And, it's important that we look at the duration, if there has been any mismatch in the duration for the bonds in comparison to, the company's assets, as well as, the kind of repayments that are due. So we just need to be making sure that all of that is aligned. So it's not only the underwriting or the inherent quality of the bond, but also these mismatches that we would be assessing.
Thank you, Prachi. Hi, V. We have one question here from audience for you. Not sure you want to take up. So can you tell me what's the main reason for VCI to have the credit performance rated while it's not legally required? And what does VCI benefit from credit ratings? You want to share why you engage us to do the rating, or... We couldn't hear you, V.
Oh, sorry, because you unmute us.
Oh, really?
You muted us. Okay, so yes. So regarding the why we doing credit grading for ourselves, if you go through the circular 153, which is now replaced by Decree 65, you see that the intention of the regulators regarding bond market and in general is that in the future the regulator will require companies, brokerage houses, and other bond issuers to have credit rating. So for us, it is a sooner or later event, and therefore we, as one of the leading securities company in Vietnam, and also we want to expand our bond business. We want to be the pioneer in complying with future regulations. So that is why we're taking up on credit rating. We believe that with our credit rating, we will create a more level playing field between us and other securities and other bond issuers, not just within the securities environment, but and also with a brokerage house like us who have a credit rating. We believe that it's going to increase our clients' confidence in VCI and in our products, as bond products. Also, we are working with a lot of foreign institutional clients, and also especially individual clients, high net worth individual clients. And in the future, if we want to expand our bond business for both institutional or retail, then we believe having the credit rating is a plus in our services that will help clients to have more confidence in us, especially after a lot of events that we already witnessed last year and in the beginning of 2022. So we do believe that having credit rating going to increase our credibility and confidence of our client in VCI.
Thank you, V, and thanks for supporting us and supporting the rating industry development. But actually, I would like to share a little bit further our rating. We have been rating 12 companies, and many of them, the rating requirement come from either the lender, creditors, or the shareholder. For creditor, it's very clear the value. They would like to have some independent view about the companies. You know, why they are not enjoying any much upside potential. And for shareholder, especially the major shareholder, they would like to avoid the dilution because as long as the credit profile rating is clear, they have a better chance raising the debt on the debt market, but not the new share issue and causing the dilution to the existing shareholders. Thank you. We have one question directly for VCI. The lead analyst, Hoàng, you want to take, or V? In case of foreign fund inflow into Vietnamese equity market may be low due to the reason the Fed policy, meaning the increase in the interest rate environment, and how that impact the rating of VCI. Maybe first to analyst, rating analyst Hoàng, because you mentioned during the presentation is VCI is top market share on institutional brokerage clients. So this question maybe come up from audience here. So we want to address that, Hoàng.
Okay, excellent. Thank you for the very interesting question. So I think it will have the impact for VCI, but the impact I think is very limited. So as I have mentioned, I think the business model of VCI is well diversified between segments. So the impact of Fed policy to the fund, foreign fund inflow, I think this only have an impact for brokerage service segment only. On the other hand, the business model of VCI in most of their operating income is coming from investment activities, coming from IB and advisory service, and also the margin lending. So I think it will have some impact, but overall not much big impact to VCI. That's my opinion.
Thank you, Hoàng. So we are running out of time. We have 2 minutes left. So any question, and I think the last question from audience, if you want to ask directly us, our speaker today. So I assume no. So we have spent together almost 2 hours together talking about the markets, equity markets and corporate bond markets, and a number of policy affecting the market, especially for corporate bonds. And we have discussed about the key risks of the brokerage service industry in Vietnam as well. So, and we have a chance to present about the credit differentiation between the companies and the historical default as a why our rating matters to you and to the markets. And we have some sharing about our from our speaker about regional view on Vietnamese securities company. And we talk a little bit detail on the Viet Capital Securities, one of the top securities company in institutional market share. We have read that recently and announced to the market. And we address a couple of questions from you before this event, and few questions popping up as a live chat during this event. And I think we haven't addressed all the key issues, but I hope you see our view on the markets, especially at this condition about low liquidity, but not too low, actually, to our observation, and the sideway of the markets and the impact on different company on the markets. And we would like to say thank you very much, all the speaker, our team, analytical team, and Paul and Praichi dying from overseas. And thank you, Vi and Kit from the company, Viet Capital Security, for participating in our event and have a conversation or addressing the question from the audience. So today's event is very selective, and most of you are institutional investor. So we speak in English. So we hope it is useful for you. And if you have any further question, feel free to email to our analysts or our contact points. We are willing to address any issue, any question about the market in more specific manner and more detail for you. And that's, remember, don't hesitate to do so. We are the CA. It's our fiduciary role to the market. We need to take care of you, not only our clients as an issuer. So we are happy to share our view, and that's one of the responsibility to the market. And we are very happy to make that kind of contribution for a fixed income market. Having some very neutral and balanced view to the market, especially for the investor who has not has a chance to access to the detail and information and the market insights. So the PDF link of this presentation has been sent on the room chat. So I hope you may want to obtain that or sharing to your college in the time to come. Thank you very much, and looking forward to talking with you on the other sector as well. And thank you everyone for the time, and thank you the team, the logistic and the content team for the event today.